Do you really need a financial advisor? I've asked myself that before, so I thought let's take a closer look at this question. To start, what exactly does a financial advisor do? In simple terms, a financial advisor helps you get to your financial goals by offering specific advice. This includes offering advice on investments, savings, retirement, tax planning, mortgages, and even insurance. It sounds like a lot, but financial planners should take these into account to help you reach your goal. And these goals should be tailored very specifically to your circumstances. You should expect that a financial advisor takes the time to go through your situation and proceed to recommend decisions and products. This is important not only because people have different financial circumstances, but also they have different risk appetite and objectives. For example, someone may want to have enough wealth to leave to their kids when they pass away, whereas others may prefer to spend all their wealth in their lifetime. Once the advisors have understood your situation, they can then proceed to build a strategy to reach your goals. These could be recommending the right investments, tax-efficient wrappers, or providing insights on specific actions like retiring early. That's where they can shine because you may not be aware of many relevant investment products, but they do. Or perhaps your limited knowledge of the UK tax system is holding you back. Or maybe you have a specific lifestyle in mind that you would want to achieve at some point and want to know how best you can get there. A financial advisor should be able to use their knowledge and crunch the numbers to show you how exactly to get there. To illustrate this, let me give you an example. Say you're looking to retire comfortably and live the life you deserve. If you're still working, perhaps you might wonder, how much should I save in a bank account? Or should I invest instead? Or should I put my money into my pension? Or should I overpay my mortgage instead? More specifically, how much should I put into my ISA, SIP, workplace pension, or just a GIA? Am I saving too much or not enough at my age? On retirement, how much income can I expect to get, and what if there's a market crash? What about taxes in retirement? How is that affected by the state pension? You get the idea. These questions often require navigating through complexity, and if you don't know what you're doing, you could lose out on opportunities, or worse, lose money straight up by doing very risky things like day trading, options trading, putting all your money into crypto or NFTs, and so on. A financial advisor can also keep you on track by suggesting essential personal finance habits like maintaining an emergency fund, reducing or avoiding credit card debt, reducing unnecessary expenditure. It's a bit like acting like a coach, keeping you motivated and on track. They celebrate your successes and help you navigate through setbacks, ensuring consistent progress towards your financial goals. So all in all, I don't personally doubt that a good financial advisor can be beneficial. However, this is dependent on how much do you know about personal finance and how much time do you have on your hands. If you have a solid foundation in personal finance or enough time to learn about it, then perhaps an advisor may not be necessary. Proper financial management, nevertheless, can be time-consuming, and sometimes you may come across the wrong information. But generally speaking, if you're someone who reads up on this topic through personal research or online tools, you might find a financial advisor less useful unless you have a really complex situation, which brings me to the next point. How complex is your situation? Following from the above, if you have a good foundation in personal finance and all you do is just earn, save, invest, spend and repeat, then a financial advisor could be of limited value. Online platforms, financial planning software and robo-advisors offer low-cost, efficient alternatives. These tools use algorithms to provide personalized advice and can be a great option for those with simpler financial needs or a do-it-yourself mindset. On the other hand, if you have a complex financial situation, then tailored solution could really help. In case of doubt, you could decide to have a one-off consultation with an advisor, and that should be at a low-cost fee, if not free even. Speaking of costs, let's talk about what they are charging you for and how. Generally, financial advisors should tell you upfront how much they would charge for what. If you go to the Money Helper website, link is in the description, you'll find a nice article about this. Typically, the advisor can charge an hourly rate, a fixed fee, a monthly fee, or an ongoing fee. If your fee is recurring, always ask what is it that they are doing that requires a recurrent fee. If the fee is a percentage of your investments, ask why and how does this scale up. Does a £200,000 portfolio means twice as much as a £100,000 portfolio? I think this is where you really need to be careful. The impact of a percentage fee on a portfolio is astounding when you compound that over a long period. The difference between a 6% and a 5% returns over 30 years is a quarter of the total portfolio value. I'm not strictly against a percentage charge as long as you can justify why this is costing so much. The other point I wanted to make is there could be conflicts of interest. Now, while many financial advisors genuinely work in their clients' best interests, some bad actors may be influenced by the financial incentives tied to certain products or strategies. It's important to understand how your financial advisor is compensated to ensure their recommendations are aligned with your best interest. As I understand, advisors cannot be paid a commission if they give advice on pensions, investments, or other retirement products like annuities, but they can still get commission on other products like mortgages and insurances. There are some protection against this. For example, if you are missold products, given the wrong advice, or the financial advisor did not act in your interest, you can complain to the Financial Ombudsman Service. Therefore, you can see that the ideal financial advisor should have a fair pricing, deliver value for money, understand the client's bespoke situation, and subsequently provide the best solutions. So, to sum up, if someone were to ask me, do I need a financial advisor? I'd say it depends on how complex your case is, how knowledgeable you are or willing to learn, how much they're charging relative to the value they deliver, of course. I certainly believe someone can do a great job managing their own finances, but this requires some work. I myself manage my own finances and don't plan on seeing a financial advisor yet. And that was my take on whether financial advisors are useless. What's your opinion on this? Have you used a financial advisor before? If so, how was it? Please let me know in the comments below. Thank you for watching, and I'll see you next time.